Boom or bust? What in the world is going on out there? Everybody needs to know. This is crazy. It's either everything's going to hell in a handbasket or everything's going to be hunky-dory. What's up, everybody? Welcome back to another episode of The Brief with your one and only Kenny Simpson. It's February 1st, and what does that mean? Rent is due. So if you got cash flowing properties, that money's coming in. Anyways, guys, so let's jump right into it. Today, after I shoot this, the Fed is going to meet. Most likely, they're going to announce a 25 basis point hike. They are going to keep their foot on your throat, the pedal to the metal. You got to remember, they do not want a 70s-like environment where they went basically inflation. It went like inflation, deflation, inflation, deflation. It's a nightmare. It's not good. So they are going to stay the course of 25 basis points. Why in the world are they doing this? Because they want to make sure that inflation gets down and gets basically to the bottom and stays there around 2%. What is going on with interest rates? Well, interest rates honestly remain flat. All-time high rates, probably around 7.3, 7.5 on a conventional mortgage. That's the average. Today they said about 6. They're actually a little bit lower if you're wholesale, so everybody has different rates, but that's the reading. So rates have come down. So let's talk about what's going on in the market because it's crazy. Have you guys been paying attention? It was like doom and gloom, Q4, 2022. Everybody hate real estate again. Not everybody, you know what I mean. Rates were high. Sellers were pricing, their homes like it was, this time of 2022. But guess what's happening? There's new listings. What's happening is there's new listings. But what's happening is they're able to price that listing more accurate. Why? Because they're taking data from October, November, December, September. The problem when that person listed their home in October to sell, they were getting data from prior. So they're bringing in a good comp and a bad comp and screwing everything up. Now, if you see a home on the market that's sitting there, it's because some seller, sorry if you're one of them, is in denial that the market is worth $100,000 more or $200,000 more or $50,000 more, whatever the number is on your house. But what's happening now? Inventory, as I talk, is at like 2,800 for all the inventory. There's 497 pending. So if we don't get more listings to replace these, inventory keeps ticking down, guys. In December, it was over 3,000. We are ticking down 100 per month. Not good. So what's going on? Buyers in 2023, they're ready to buy. Interest rates are lower. Their debt payments are lower, right? For the cost of mortgage, they're excited. They want to buy a home. They've been waiting for this opportunity. They missed out in 19 and 20 and 21 and 22, and here we are. And what does that mean? No inventory, higher demand. Yes, you're seeing 5 offers, 10 offers, 15 offers. I'm hearing up to 20. I heard on one deal, 28 offers, 28 offers. I have clients overpaying for houses again. Yes, this is happening. So if you're a buyer, you might not get those concessions. And oh, by the way, if you want the 2-1 buy down or you want the concession, be prepared to pay more for the house to get it. So I'm not saying moving forward, but right now, Q4 is probably the better time to buy a house if you wanted those big concessions and a better price. Right now, I'm not seeing as much. And as we keep moving forward into spring, summer, and the demand's there and the supply does not pick up, that's what we're looking at. I posted an article on a platform. I got agents from all over the country, all over, probably 30 markets telling me they're dealing with the same thing. So it's not here in San Diego. It is everywhere. Also, I want to talk about is, rates are steady. I don't think you're going to see much movement there. As inflation ticks down, they'll come down. We'll see what happens with the quarter rate hike, but I don't really project any rate changes quickly. We seem to just stay flat at this 3.5% on the 10-year. We're not moving. We got a little bit of downside, a little bit of upside, but it's kind of staying right there. Also, I wanted to go over an interesting fact. So I'm putting together this webinar. I think it's going to be super awesome. So you guys are going to have to check it out. I'm really going to go through of like what's going on from inflation to like rates and just history and bring it forward. But one of the things I was putting in there is a chart of how many homes were built, right? So basically, I went back and I said, well, how many homes were built over the last, 50 years, 20 years, 10 years, all this? And so I was like, let's focus on when we had like the big housing boom, right? When we always talked about the liar loans, the, heartbeat and pen loans and stuff like that.
So from 2000 to 2009, there's almost 15 million homes built. Okay. So you can do the math. And during the years like 2005, 2006, it kind of peaked. So we were building almost 3 million homes, okay, during those years, but averaging about 2 million. And we should be averaging about 2 million homes a year. But what happened, that fell off a cliff, right, in 2009 and went down to like 500,000 homes and started ticking up. And then in 2020, we started hitting about 2 million in homes being built. So from 2010 to 2000, what do we got here? In 19, there was about 7 million homes built. So you can see we're way under the homes built. And then right now we were looking pretty good for 2020. And then those rates got jacked up and those builders have stepped their foot off the gas. So we'll probably come into declining home building. And so that was the interesting fact that I want to talk about this week. But otherwise, guys, I want to go back to my boom and bust, what I opened up with. So as you guys may know, I watch a lot of podcasts, interviews, read a lot of articles. And what's interesting out there is a lot of big CEOs that, maybe 98% of CEOs of late last year thought we were going to have a recession, maybe a soft landing, hard landing, and we really don't know what's going on. But there's this boom and bust talk going on. I'm not even talking about in real estate. We're talking about in the general economy. We're talking about in the consumer. We're talking about in company like the margins, the income and all that. But what they're saying is that as we go further along in this year, that they're looking at consumer spending and they're saying there is no way the consumer, like us, all of us out there in the world, in the US, can keep up this pace. Rents are high, gas is high, milk's high, food's high, clothes are high, everything's high. But if you're going around, restaurants are full, right? Hotels are full. Vegas is absolutely like at crazy level fulls like they've never seen it before. I'm just giving you guys examples. So everything's full. People are shopping at the mall and everybody keeps saying is, how is this sustainable? How is this sustainable? We just came off a crazy big boom spending spree. That was what? Nobody's paying their bills, helicopter money, free money. You guys know what happened, right? We all lived through it. So what they're saying is we're kind of feeling this boom right now, but what happens when that savings rate that was at $2.5 trillion now is about $900 billion, that starts going away? What they're thinking is you're going to see that consumer run out of money. They're already tapping their credit to keep up this lifestyle, to keep up this boom, and that's going to pull back. Maybe there's a big pullback in spending. Then there's going to be possibly a big pullback in company profits. And what happens there is then you start seeing the firing. So this will be interesting to watch. I want to bring it to your attention because this is something that I'm watching. And a lot of people are projecting the second half of the year, this is when it's going to happen. But besides all that, if you're looking to buy a house, get ready, be prepared, get a good team, make sure you're pre-qualified. One recommendation, write an offer where you can close really, really quickly. So what people are doing here is we get them pre-approved and we can get you ready to go and you can write a 7, 10, 15-day close and knock it out of the park. So that's what you should be doing to separate yourself from the competition, amongst other things. Anyways, thanks for watching. My name is Kenny Simpson. If I can help you, let me know. Until next week, have a great week. See you guys then.